Now Nissan is on life support. The company may not survive beyond 2025.
Nissan just dropped a bombshell that's got the entire automotive world buzzing. This isn't just another car launch or a fancy new feature. They're going all in with a move so bold it's left insiders scrambling and consumers on edge. You see, not too long ago, Nissan was a symbol of Japanese automotive excellence, known for innovation and reliability. But today, the company's story has taken a dramatic turn. Plummeting profits, jaw-dropping price cuts, and whispers of looming bankruptcy have thrown the industry company into chaos. Now, in a desperate bid to rewrite their fate, Nissan has unleashed a plan that's just as shocking as it is risky. So what exactly have they announced? And could this daring gamble save the company, or push them further into the danger zone? Let's dive into the details and unpack what this means for Nissan and the entire car market. Nissan is really going through a rough patch right now, so much so that they've had to roll out some jaw-dropping price cuts on their most popular cars. And when I say jaw-dropping, I mean it. These aren't your typical save a few $100 kind of deals. We're talking discounts so deep that they're hard to believe. Cars that used to cost $25,000 are now going for nearly half that price. Naturally, this has people talking. Consumers are excited because hello bargains. But industry experts are scratching their heads, wondering how things got this bad for Nissan. So what's the deal? How did one of Japan's top automakers end up in this situation? Well, it's a long story, but the short version is that Nissan's sales are tanking big time. A few months ago, they reported some pretty grim numbers worldwide. Things got so bad that they had to lower their profit expectations for the fiscal year not once, but twice. First in July, and then again in November. And let me tell you, those numbers are brutal. Take this for example. In the third quarter alone, Nissan's operating profit didn't just dip, it plummeted by a staggering 99%. Let that sink in. Sales weren't much better, dropping 5.5% in August. That made it the 5th straight month of declining sales. Ouch! According to Bloomberg News, the company's financial outlook isn't looking great either. Nissan now expects to pull in 500 billion yen, that's around $3.5 billion by the end of the fiscal year. Sounds like a lot, right? But here's the kicker. That's a 12% drop from their earlier estimates. They've also had to slash their full-year sales target to 3.65 million units, which is way below what they were aiming for. And investors, well, let's just say they're not thrilled. Nissan stock has taken a nosedive, dropping 27% this year alone. For a company that was once at the top of its game, this is a huge fall from grace. It's tough to watch, honestly. Nissan has been around for decades and has given us some iconic cars, but right now they're in survival mode, trying to figure out how to steer the company back on track. One of the biggest challenges Nissan is facing right now is in its two key markets, the United States and China. These two regions are powerhouses for the company, making up nearly half of Nissan's total global sales. But here's the problem. Nissan is struggling in both, and for very different reasons. Let's start with China. In August, Nissan's sales in the country dropped by a staggering 24%. And while the company kind of saw this coming and responded by shutting down a plant and scaling back production after years of sluggish performance, it's still rough. What's making it even harder is the rise of local competitors like BYD. These guys are absolutely crushing it in the electric vehicle game. They're rolling out cars packed with the high-tech features that Chinese buyers love, while Nissan is stuck playing catch-up in the EV race. Now, let's hop over to the United States, where the challenges are totally different but just as tough. Chinese cars aren't much of a threat here because of tariffs, but Nissan is struggling to keep up with the growing demand for hybrids. Hybrid cars are becoming super popular as people look for better fuel efficiency and greener options. Competitors like Hyundai and Kia are already killing it in this space, but Nissan doesn't even have hybrids in its US lineup yet. As if that's not enough, things aren't looking great back in Japan either. At Nissan's main plant in Kyushu, production of gas-powered models, especially the Rogue, a key player in the US market, was slashed in half last July. They made just under 25,000 units, and only 10,000 of those were earmarked for US exports. That's half of what they originally planned. This production cut wasn't just about demand, it's tied to some brutal financial losses. Last year, from March to June, Nissan posted a profit of 128.6 billion yen. But in the same period this year, that profit plummeted to just 1 billion yen. You read that right, a drop of more than 99%. Ouch. A big chunk of this is because Nissan had to offer massive discounts on Rogues sitting in US lots to try to clear out inventory. Speaking of inventory, here's another curveball for Nissan. They're sitting on a global stockpile of around 640,000 vehicles. That's their largest inventory in 4 years. And a big chunk of those cars are parked in the United States, where Nissan's lack of hybrid models is making it super hard to keep up with the competition. Now, here's where things get even trickier. Many of Nissan's vehicles feel, well, old. Some models haven't had a proper update in nearly 5 years. That's like using a smartphone from 2018 while everyone else is flaunting the latest tech. Sure, Nissan has launched new versions of the Kicks and Armada recently, but the rest of their lineup is definitely showing its age. Meanwhile, competitors like Ford, Chevrolet, Honda, Hyundai, and Kia are rolling out fresh, updated models at similar price points, stealing the spotlight and the sales. Let's talk numbers. In August, Nissan's US sales dipped by just 0.1%. Not a massive drop, but still concerning because it marks the first monthly decline since April. And here's the kicker. While Nissan is struggling to hold steady, other automakers are seeing growth, especially in the hybrid and electric vehicle segments. The third quarter was no kinder to Nissan. US sales slid by 2.2% during that time. Compare that to Hyundai, which posted a 5% increase in the same quarter. And get this, Hyundai's hybrid sales alone jumped a whopping 36% in September compared to last year. That's some serious momentum, and it's all thanks to their strategy of leaning into the hybrid trend that consumers are clearly loving. Now, Nissan's difficulties are hitting its dealerships hard. US dealers have seen their profits fall by a staggering 70% over the past year. Even though they've been pouring money into advertising and offering all sorts of incentives, a lot of Nissan dealerships are still having a hard time moving those 2023 models. It's not exactly the kind of start to the year they were hoping for. James Hong, an analyst from Macquarie Securities Korea, recently chatted with Bloomberg about it and said that, in his opinion, Nissan is going to have to do something big to get those cars off the lot. Either they're going to have to bring in some new models that people want, or they'll need to drop prices even further. They've recently launched a couple of new models like the Infiniti QX80 SUV and the Nissan Kicks crossover, but unfortunately these cars aren't exactly flying off the shelves. Both are smaller volume models that won't make much of a dent in the massive stockpile of unsold vehicles they've got. Then there's the Ariya, which is Nissan's top-selling electric vehicle. Here's the catch. It's not eligible for the $7,500 federal tax credit in the US because it's made in Japan. That's a pretty big disadvantage, especially when there are so many other electric vehicles on the market that do qualify. Nissan's tried to make it more attractive by offering some affordable lease deals, but that hasn't been enough to convince buyers to take the plunge. Now, things are getting pretty dire for Nissan, and it's no secret. They've been making some pretty drastic price cuts recently to try to stir up interest and get customers in the door. While these price cuts have been a win for consumers, yay for cheaper cars, they're also cutting deeply into Nissan's profit margins, and that's draining their financial reserves. It's kind of like trying to put out a fire with gasoline. Short-term boost, but long-term problems. And the big kicker here, it's that Nissan has lost a lot of consumer trust. Their reputation for reliability, which used to be one of their strongest selling points, has taken a pretty big hit in recent years. A lot of that damage comes from ongoing issues with their continuously variable transmissions, which have been causing problems for a lot of drivers. Combine that with their financial struggles, and it's no wonder that many people are now hesitant to buy from Nissan, and this trust issue is probably the hardest thing to overcome. It's not something you can fix overnight. It takes years, not just months, to rebuild a brand's reputation once it's been tarnished. So why does all this matter to you? You might think this whole Nissan crisis is just some corporate drama unfolding far away from your everyday life, but honestly, it could affect you more than you think. Whether you're a car enthusiast, someone who's in the market for a new ride, or just a regular commuter, what's happening with Nissan is something that could eventually impact you. For one, if you're in the market for a new car, this could be the moment you've been waiting for. You can snag a high-quality vehicle for much less than you'd usually pay. These kinds of deals don't come around every day, so it might seem like a once-in-a-lifetime opportunity to get behind the wheel of a solid car without draining your bank account. But what happens if things go south for Nissan? If they can't pull out of this tailspin, we could see some serious consequences. Will getting parts and servicing your car become a hassle? Will resale values drop to the point where your car isn't worth much down the road? There's a lot of uncertainty, and it's something to think about before jumping in. But it's not just about the price right now. Nissan's situation opens up some bigger questions about the whole car industry. What will other car manufacturers do in response to these steep price cuts? Could this spark a price war between companies? On the surface, that could mean even more great deals for consumers in the short run, but could it end up causing bigger problems for the industry? What does this crisis tell us about the struggles traditional automakers are facing, especially as the market shifts toward electric and hybrid vehicles? Another issue Nissan has had is an over-reliance on fleet sales. Now, I'm sure you've heard of fleet sales before, but just to recap, it's when big companies like rental agencies, businesses, or government organizations buy vehicles in bulk. It sounds like a smart move, right? Consistent sales, a steady flow of vehicles moving off the lot, but here's the catch. While it's steady, it doesn't bring in the kind of profits that individual consumer sales do. Think about it like this. Imagine a local grocery store that decides to fill its shelves with bulk items at a discount. Sure, the store moves a lot of product, but the profit margins are razor thin. That's what Nissan's doing with fleet sales. They're moving a lot of cars, but they're not making nearly as much money as they could if they focused on selling to individual buyers. Here's the crazy part. Over 30% of Nissan's US dealerships are reporting financial losses. That's a massive chunk of the business struggling because of this heavy reliance on fleet sales. To put that into perspective, imagine if 1/3 of the grocery stores in your neighborhood were going out of business. It'd be a pretty clear sign that something's not working. Now, if we look at their competitors like Honda and Hyundai, they're focusing more on building relationships with individual buyers. They're putting out cars that people actually want to buy for themselves, not just as part of a bulk deal. This personal connection brings in higher profits and builds brand loyalty over time. People start to feel attached to the brand and they're willing to pay more for it. That's the big difference. With Nissan flooding the market with discounted cars through fleet sales, it's no surprise that it's hurting their image. When people see a car listed for a super low price at a rental lot or as part of a fleet deal, they start to see it as cheap, not valuable. This lowers the perceived worth of the vehicle, making it harder for dealerships to sell those cars at full price. There's also the Carlos Ghosn scandal. You'll definitely want to hear this. Okay. Picture this. Imagine a leader who was once seen as the savior of a floundering car company, only to find himself at the center of one of the biggest scandals the automotive world has ever seen. That was Carlos Ghosn. You probably remember his name, right? He was the guy who turned Nissan around in the early 21st century when the company was on the brink of collapse. Under his leadership, Nissan went from almost going bankrupt to becoming a giant in the global automotive market. But then, in the late 2010 years, everything came crashing down. He was arrested on charges of financial misconduct, and suddenly it was like the rug was pulled out from under the whole automotive world. For many people, especially Nissan's employees and investors, it felt like being stabbed in the back. Ghosn wasn't just the chairman, he was the face of the company's revival. His leadership had made him a legend in the business world. But then, the allegations started pouring in. The charges against him were serious. Everything from underreporting his income to allegedly misusing company funds for personal gain. It wasn't just the scandal itself that rocked the company, it was how it shattered the carefully crafted image of a man who had once been a symbol of corporate success and leadership. For employees who had looked up to him, it felt like a personal betrayal. Many had trusted him to guide the company through tough times, and now they were left questioning everything they had believed in. Investors who had placed their faith in his leadership were left scrambling, unsure of what the future held. It wasn't just Ghosn's reputation that took a hit, it was Nissan's. The company's image was tarnished, and it became clear that the scandal wasn't just about one man's fall from grace. It was about the cracks in Nissan's foundation that no one had noticed until it was too late. And then came the drama that would make even the wildest tabloid headlines look tame. Ghosn's escape from Japan. In one of the most bizarre and secretive escapes ever, Ghosn managed to flee the country, sparking a frenzy of speculation and intrigue. But this wasn't just gossip fodder, it was a seismic event that rocked the company to its core. It was a huge blow to Nissan's culture, and it left everyone questioning how something like this could happen in the first place. The values that once defined the company, values like transparency, trust, and responsibility, had been utterly betrayed. The scandal wasn't just a personal one for Ghosn, it was one for for the entire company. But here's the thing, the Ghosn scandal didn't just highlight the wrongdoings of one man, it pulled back the curtain on some serious issues with how Nissan was being run. It exposed a whole bunch of problems with the company's governance, problems that had been ignored for far too long. As the public began to learn more about how the company was structured, it became clear that Nissan's governance was way behind the times. There were no real checks and balances to keep anyone in power in check, which allowed a single person to have way too much control. That's a recipe for disaster, right? And when the regulators and industry watchdogs started digging deeper into Nissan's internal processes, the findings were bad, really bad. It turned out that the company's governance standards were shockingly low, far below what you'd expect from a company of Nissan's size and global influence. The lack of oversight created a situation where abuse could happen, and that's exactly what it did. Naturally, this caused a massive loss of confidence, not just from the public, but from Nissan's own stakeholders. Longtime investors, partners, and major shareholders started losing trust in the company. They began to question whether Nissan could ever operate transparently and responsibly again. It wasn't just a hit to the company's reputation, it was a deep internal crisis. Employees at every level, from the factory floor to the executive suite, started to wonder how they could have missed such massive governance failures. It was like a betrayal of the very foundation that the company was built on. So, is there any path to recovery? Well, they've got a plan in the works to turn things around, and it's all about going electric. Nissan is committing to launching 7 new hybrid and electric models in the US by the year 2028. Sounds promising, right? It could help them keep up in a market that's changing fast. But the big question is this enough to really turn the tide for them? Now, here's the thing. Nissan's focus on electrification isn't just a nice to have, it's a must. The whole automotive world is shifting, and the future is clearly heading towards sustainability and innovation. If they want to stay relevant and competitive, they really have no choice but to dive headfirst into electric vehicles and hybrids. They've set their sights on becoming a leader in hybrid and fully electric vehicle technology, which is a bold move given how much the landscape is evolving. A big part of their strategy is an investment in solid-state battery technology, which could totally change the game. These batteries are next level. They promise better energy density, meaning they'll go farther on a charge, faster charging times, and improved durability. If Nissan can pull this off, they could be in a great position to compete with the big dogs in the industry, like Tesla. But there's a catch, the timeline. Nissan has set a goal to bring these cutting-edge solid-state batteries to market by the year 2028. But here's the thing, Tesla is already ahead in the battery tech race, and other competitors like Ford and GM are pushing hard with their own EV innovations. So, the big question is whether Nissan can keep consumer interest alive while everyone else is speeding ahead with their electric dreams. Speaking of consumers, there's no denying that the trend toward electric vehicles is picking up steam. Surveys show that almost half of potential car buyers are seriously considering an electric vehicle for their next purchase. And why not? With rising fuel prices and growing concerns about the environment, the shift toward electric makes more and more sense. This means automakers have to stay ahead of the curve to meet the demand for cleaner, greener options. But here's where Nissan has some work to do. While they're stepping up their game, their current lineup of hybrid and electric vehicles just isn't as diverse or integrated as competitors like Toyota and Hyundai. These companies have already built solid reputations with their hybrid and electric offerings, giving them a significant edge in the marketplace. Nissan's going to have to hustle to catch up, but with the right strategy, they could still make a big splash. Nissan's challenge right now is a big one. It's not just about rolling out new electric and hybrid models, but also about rebuilding the trust of customers who have been let down in the past. You see, issues like reliability problems with their transmissions have left some bad marks on their reputation. It's not enough for Nissan to just launch fresh models. They've got to show consumers that they've learned from past mistakes and can deliver cars that are not only dependable but packed with innovative features. If they want to win back those disillusioned customers, it's going to take more than just flashy cars. It's about proving they're committed to quality, keeping up with the latest tech, and building a brand story that screams we're looking ahead rather than we're stuck in the past. The stakes are high. If Nissan can nail its electrification game, they could reclaim a strong position in a market that's growing more crowded by the day. But if they miss the mark, they could see their market share continue to shrink, and that's a tough spot to be in. The automotive world is all about innovation and sustainability right now, so any company that fails to keep up risks being left behind in the dust. One of Nissan's biggest hurdles is convincing customers to wait for their new lineup of hybrids and EVs. Why wait for Nissan when Toyota and Ford are already pushing out innovative hybrid models? And then there's Tesla and Rivian, both of which are killing it in the EV world. It's tough competition, and Nissan's timeline for releasing its new vehicles could end up feeling like too little, too late. The market isn't going to wait around, and customers have options. Plenty of them, and Nissan's future isn't set in stone, but they're not out of options yet. To avoid falling off that financial cliff, they'll need to get aggressive with pushing their upcoming hybrid and electric models, streamline their production processes, and offer some sweet incentives to move their current inventory. The market's moving fast, and Nissan has to prove they're not just catching up, but leading the way. Most importantly, they'll have to work overtime to win back consumer trust. That means offering cars that don't just look good, but also come with competitive pricing, top-tier technology, and a style that makes you want to take one for a spin. It's a lot to juggle, but if they pull it off, they could be in a good position to turn things around. So, what do you think? Will Nissan make it, or is this the beginning of the end for them? Let us know your thoughts in the comments section. Also, make sure to like this video, subscribe to our channel, and activate the notification bell to stay updated with all our latest videos. While you're still here, click the video on your screen to see more interesting content like this one.